Sterling hit a 7-year high against a battered euro on Thursday after the Swiss National Bank's shock decision to scrap its 3-year-old cap on the franc's value against the euro, which left currency investors reeling. Today I'm joined on the line by Ava Trade's Naeem Aslam. Naeem, you believe the euro will be at 0.76 against the pound in 1 month's time. So tell us more about the trading patterns occurring right now, and how do you see it trading against the pound before and after this week's ECB meeting?
First of all, thanks for having us again. What I would say is that the judgment day is approaching extremely quickly, and so far the European Central Bank has done a fantastic job, if any, in terms of managing the quantitative easing expectations, which is pretty much priced into the market. But how this will trade coming into the European Central Bank's meeting day, I think there's a risk of ECB disappointment on Thursday. There's a small chance that the traders will say that the support and the quantitative easing provided by the European Central Bank would not be enough. How the pair would trade before the meeting, we could see some sort of a profit taking for the pair, and after that there could be a disappointment in relation to the ECB, so the euro could actually get a bit more stronger against the sterling, but the trend would certainly decline, because the chanting would be coming into the market that they were saying, okay, we need more and we need more quantitative easing from the ECB. So more and more would be the key phrase from the markets in the coming days.
Naeem, you believe the euro will fall only very slightly in 6 months' time to 0.75. Now, why don't you think it will fall further?
Well, some investors have started moving their money into sterling, and we do think that for the next few months it's not going to fall that much, because number one, inflation is not that much of an issue when it comes to Bank of England. But having said that, they are obviously concerned about the slow growth and how that is impacting the UK economy. And for this reason, we think that the room for sterling in terms of a growth or any upward move for sterling itself is pretty much limited.
And finally, Naeem, what will be the main driving factors pushing the pair to 0.73 in 12 months?
This would be, once again, it would be the growth in the Eurozone, inflation in the Eurozone, and the central bank. And markets would be calling from European Central Bank's perspective. They were saying, okay, we need more quantitative easing. Again, the big question going into Thursday is going to be how much they are going to buy on the market. Is it going to be 100 billion? Is it going to be 500 billion? Because what we really wanted to see some sort of a buying in trillions, and the ECB needs that kind of a buying in order to boost their balance sheet so that they can revive the growth in the Eurozone, which we don't think that would happen this month, on the 22nd, but it could certainly happen in the coming months.
Naeem, as always, a pleasure speaking to you. Thank you very much for coming on the show. Well, viewers, do stay tuned, as we have plenty more just like this heading your way. Goodbye for now.